let's welcome Sandip Sabharwal on board. And Sandip, hi, morning. Thanks so much for joining us. Give us a sense of where you see the markets heading today. We've had lots of news flow coming in over the weekend. Certain pharma stocks are going to be in focus. Defense, railways continue to surge. On the other side, you have pharma and FMCG that have been slightly lackluster over the course of last week. Give us a sense of where you are seeing the markets headed today. What sectors could be in focus?
Where the markets will end up today is very tough to predict, but I think directionally things look fine. So over the weekend, we obviously had the US debt downgrade, which in my view will not have a significant impact on other emerging markets because it has nothing to do with that. But it's US specific and two rating agencies that already downgraded. So this was the third one. So it's not such a big news. But it could directionally put pressure on the US dollar, which is obviously positive for emerging markets. Now, on specific sectors, obviously, we've seen a big frenzy in defense stocks. And I think at this point of time, after the run up, investors need to be cautious on where they are investing on the defense pack because valuations of many stocks have run way ahead. And some of the private sector, some public sector companies also are trading at price earning ratios above 100, which is not justifiable under any assumption.
Good morning to you, Sandeep. Good morning. Chandan Taparia is also joining with us. Very good morning to you, Chandan. But before I come to you, Chandan, Sandeep, let me take this question to you. Given the fact that, yes, you did speak about defense, that one also has seen a sharp rally, and you're of the view that, yes, you need to be a little cautious given the fact that you have valuations that are running ahead right now. But there's another sector also that has performed exceedingly well. Last week was Realty Index, 11% up move coming in for the Realty Index in the week gone by. What could be the likely triggers for someone to actually take a look at real estate space right now?
On the real estate side, I think we've been getting mixed news flows. On one hand, we've had news that sales are somewhat stalling after 2-3 years of good run up, and price increases obviously have stalled now after the sharp up move post COVID. On the other hand, there are also news flows on some specific launches getting huge interest in the pre-launch period. So it's a mixed picture. Many of the real estate stocks have corrected also, but I would still think that they are not really cheap relative to uh, the growth prospects in the near term. So I think we need to wait to see corrective moves, opportunities, better opportunities, etc. So if people need to invest, I think BLF seems to be better placed vis-a-vis the other companies on a valuation as well as risk return perspective. But overall, my view is that real estate after the sharp run up needs to consolidate for some more time.
All right, so that's the view coming in on the real estate pack. But Chandan, let me come to you. First of all, a very good morning. And the first stock that I wanted to discuss with you is BEL because this has been the star performer of late. What a fantastic move that we have seen for the past 2 weeks rather coming in for this counter, and the news flow is also positive. As in the latest, the company has bagged fresh order worth 572 crores for cutting edge defense systems as well. But Chandan, the news flow is positive, the earnings due today, but how should investors or traders rather place their best given the move that we have already seen such a good move on this counter?
Yes, good morning. Thanks for having me. So BL has recently seen a decent run up. In last 1 year, the stock has rallied by more than 70%, more than 23-24%. In fact, in last 3-4 trading session, we have seen a strong momentum in most of the defense counter. So I believe that the bullish stance could continue. In fact, we have positive view on the entire defense space, including BL, HL, Mazgaon, Dog, Paras, Cochin, and all. So BL is one of the strongest counter. It has been making higher tops, higher bottom on the weekly chart. In fact, the rollouts were better, and delayed volumes are continuously shifting upwards, which indicates that ongoing momentum could continue. So we are recommending to buy on BL. In fact, I am expecting it to head towards 375 to 385. One can buy with support of 355. So those who are holding for immediate as well as the positional can hold the counter for 3 to 4% up on immediate basis and 15 to 25% movement on positional basis. So one can continue to stay long on most of the defense name, especially BEL.
Okay, so that's the take coming in on BEL. Samal, let's come to you and talk about the railway counters that were in focus last week. Pick up anything like an IRFC, you have RITES, IRCTC, IRCON. In fact, so many stocks from the railway pack have done very, very well for themselves. Give us a sense of how these stocks are placed on the charts. Do you believe the run-up that these stocks have seen have been too much too soon for the stock and now time for some consolidation, or the momentum build-up that we've seen is here to stay for some more time?
I think the momentum still should keep going because a few stocks like IRCTC or RENL, Realty, they have just given a breakout now in the last couple of trading sessions. And I think after a breakout, I would at least expect 3 to 4 days of good a momentum on the upside, then a small consolidation. But at this moment, at this point of time, good volumes, breakout from consolidations, closing about 200 daily exponential moving average. A few stocks have just given a fresh buy signal on the momentum indicators. So what the entire setup looks great, and I'll be looking for a good rally on the upside in the medium term outlook. In the short term, yes, we've seen very sharp moves on the Friday, so the stop loss would be very, the stop loss would be not that great because we have seen 5 to 8% rise on Friday on few stocks, so the stop loss would be very deep. However, if you are able to keep that deep stop losses, I think on the upside 15-20%, that's what I'll be expecting.
To take coming in on some of these railway counters, but there'll be one player that will be in focus, or rather one stock that will be in focus in trade today, and that is Vodafone Idea, because it's approached the Supreme Court to seek relief on the AGR waiver dues after the government has rejected this request. Sumit is here to tell us more about this, exactly what is this case all about, and what does it mean for the entire telecom sector. Sumit, over to you.
Supreme Court is today going to hear an important plea regarding Vodafone Idea and its dues. Well, Vodafone Idea had approached court last week seeking relief on these dues after getting them rejected by the government. Vodafone Idea is asking for relief in public's interest. Well, recently government had converted its dues into equity. Equity's worth is around 49% in Vodafone Idea. Thereafter, Bharti Airtel also approached Supreme Court regarding the same, and Bharti Airtel has also asked Supreme Court for relief in this regard, AGR regard. So keeping all that in mind, these developments will be important. Vodafone Idea has already said that its dues are so much that there's a problem of being a going concern. So keeping all that in mind, Supreme Court hearing of today will be crucial.
Well, certainly, that's the key event that we have been watching. Thank you so much, Sumit, for getting us all those details. But definitely, this day will be important for Vodafone as well as Bharti Airtel too, now coming ahead and asking for a plea. But Sandip, just wanted to have your take on this one, because this has been one of those long pending issues. Both these telecom majors have been requesting the government to actually waive off some of the obligations that they have, and the amount is very significant for Vodafone Idea. But now in the fresh comments that Vodafone Idea is coming up front and saying that in public interest they want this waiver to happen since the obligation amount is that big. Do you believe there stands a chance, any probability that this can actually go through, and what steps can actually government plan to take? The Supreme Court, where are they headed? Any possibility that you can share?
I would think that it's a low probability event, and because it's so Supreme Court will go into the question of law, and I don't think it's a question of law here. So you making a plea saying that just because we'll go bankrupt and you give us relief, I don't know how much it will hold stead in the Supreme Court. So I don't think investors should be investing based on this news. In case they are successful in getting relief, then obviously it will be a big relief, and at that time people can reevaluate their decisions.
Okay, Sandeep, also want to get your view on some of the textile counters and some other counters that have exposure to Bangladesh, given the kind of news flow we've been hearing over the course of the week when it comes to trade restrictions. A lot of Indian textile companies, and even apart from textile, the likes of Hero or Imami or Marico for that matter, have quite the significant exposure from Bangladesh. Given the kind of news flow we've heard, do you expect these counters to be in some sort of trouble today, or do you believe that this is not going to impact a lot of these counters a lot?
So I think stock company by company, some analysis needs to be done because uh, how much of which company's turnover or dependence comes from Bangladesh needs to be evaluated. So I think it's a tough thing to evaluate unless the companies themselves come out and say that how much, or we know which company is impacted how much. Overall, as an economy or on a gross basis, the impact should not be so great because of the fact that the magnitude of the entire thing is, I believe, $700-800 million, which is 6,000 crores. So which should not be a significant thing, but on specific company there could be an impact. So I'm not very sure which company gets impacted how much.
All right, that's the take coming on the textile space. Chandan, on the charts, how are some of these textile players looking to you? Because a lot of news flow did support the movement when you talk about these stocks. But on the charts, anything that's looking attractive?
So if I look at the one by one, starting with Raymond, I think some corporate action has recently happened, but stock is bottomed out on the daily and the weekly chart. It has been making high tops, high bottom, it surpasses falling supply trend line. So if it manages to hold 600 marks, then ongoing momentum could continue towards 635. Right, one need to look at the corporate action as well in the counter. Apart from that, Wellspun could be in focus. Positive momentum is visible in the counter. It has bottomed out on the lower time frame as well. If I look at the Century Textile, that also bottomed out with multiple support. So I believe most of the textile name could be in buzz, expecting 5 to 10% kind of reversal in most of the name in this market scenario.
So that's the take coming in on the textile space. Let's watch out for that. The news flow is indeed positive. But Sandeep, just wanted to have your take on some of these exchange-related counters as well as some of the broking stocks as well. Because of late, and especially on Friday, what a move that we have seen in stocks like BSC, which is already at an all-time high. Even CDSL shot up almost 8% on Friday. And other than that, some of these brokerage-related counters from the likes of Angel One, they have been holding well. Anything incrementally that you are picking up in terms of these counters? What's really driving the move? And on the valuation front, do you believe that this actually needs a visit and these stocks are looking good at this point in time?
There are two things. One on the valuation. Valuations obviously are extended for a majority of these companies. And these companies tend to be highly correlated to the movement in the stock market. So I think when we had a bearish phase, we saw a sharp sell-off in most of these stocks. And now we are in a bullish phase and people expect that turnover will increase, transactions will increase, etc. And as a result, we've seen a sharp bounce back. But I think the reality is that valuations are not cheap, although these are long-term compounding stories. So people need to, so like the sell-off which happened, which gave an opportunity. So people need to look for such opportunities to invest in these companies and not invest in them when they are in a frenzy.
That's the take coming in on that space. But Somil, coming to you, also want to get your view on the entire metal space. Now, this has been the second highest sectoral gainer over the course of the week. We've had some news flow coming in on metals as well. Give us a take of what levels you're watching for Nifty Metal and if any stocks you're liking from this space at the moment.
Let's start with Tata Steel, the heavyweight on on the metals index. Tata Steel has started making hard ups bottom on the weekly charts, which is a great sign, which is a higher degree time frame. The momentum indicators on the higher degree time frame is on the buy side for a little while now, closing about 200 daily exponential moving average. The best part is that a downward sloping trend line on the weekly charts has broken on the upside. So now on Tata Steel, the definitely the medium-term outlook remains positive. However, in the very short term, we may see a small consolidation, but buy on decline should be the strategy. My favorite pick would be Tata Steel and Hindalco. Tata Steel, I think 150, 155 would be a great time to buy on this stock, and then keep a stop loss around 200 daily exponential moving average, which is around 144. On the upside, I'll be looking for at least 170, 175 for the stock in the medium term outlook. On Hindalco, same scenario. Let me get the levels. Hindalco has started making high tops, high bottom as well, but it has very good risk reward ratio than Tata Steel. Tata Steel already started, spiked up a lot, but Hindalco stop loss would be around 630, and on the upside, 715 would be the target with a very good risk reward ratio. So Hindalco would be my top pick now.
Would be the top pick when you talk about the metal space. But Sandip, I just wanted to understand in this sort of a market where we've seen a very sharp rally, where some of the sectors and most of the sectors may have actually reached a valuation uncomfortable zone, or to put it so, which is the sector that you think still has some more value left and one can actually look at in this sort of a scenario?
I think many interest rate sensitive or those plays on consumer demand revival are still in decent zone. So I would think many of the auto stocks, some of the consumer durable companies, many infrastructure capital good companies which have shown subdued results because of election related and delayed order booking, order flows, etc. last year could see a revival this year. So I think these could be a few pockets.
That in the newsmaker list, we also have NBCC today, where the company has announced that they have successfully sold 446 residential units worth 1,468 crores, and from that, NBCC will get a marketing fees at the rate of 1% of the sales value, because this is through e-auction. Chandan, just wanted to have your take on this one, given the fact that in the past 6 trading sessions, I believe, that's just a one-way move coming in from this counter from 90 odd levels to over 110 rupees now. But where do you see the stock headed? Do you still believe there lies an opportunity in this particular breakout?
Making high tops, high bottom from last 6 trading session, but on weekly chart, it just gave the breakout above 105 marks. The stock is trading at highest level of last 30 weeks, and multiple rounding formations at the lower band of the trading zone indicates the ongoing momentum could continue. So I believe one can hold the support of 107, and this counter has potential to rally to us 116 to 120 zone.
That's a take on NBCC. Samal, just want to get your quick take on Indus Bank. Now, on the fundamental front, we're hearing a lot of news flow coming in for Indus Bank. Seems like there's still some more trouble, at least on the fundamental side. On the charts, give us a sense of how Indus Bank is placed, because we've seen correction coming in for this stock. At least from the chart perspective, do you think the stock has turned attractive now? Because fundamentally, it's still marred by a few negatives. But what's the sense on the charts for Indus Bank?
Indus Bank, it doesn't look very impressive on the weekly charts or the monthly charts. It's creating high tops, high bottom, low tops, low bottom, trading below 20 and 40 daily moving average. The daily momentum indicators, weekly momentum indicators are in the sell side. I don't see any big move on the upside. Maybe in the very short term, 2 to 5% of a spike, but overall, if you see, the trend remains negative in the medium term outlook. In the short term, maybe a small spike or a consolidation, but sell on rise would be the strategy, I think, for me. The resistance would be around 838, and the next level of resistance would be 869. These are the two levels to watch out for on the upside. And on the downside, I think I'll be looking for again the previous swing low to be retested, which is around 607. But in the very short term, the target would be around 700 levels on the downside.
Sandeep, I wanted your view on the platform companies. How are these looking to you right now, given the fact that I believe you've got earnings for almost all of them right now? And in that sort of an genre, are you looking at something afresh?
Not really, because I think after the initial move towards profitability, many of these companies are taking measures which will again put a strain on their cash flows and profitability. So I think there's a, like especially Swiggy and Eternal, Zomato, etc. I think there's a misallocation of capital happening, which is exciting analysts because it leads to higher growth on the top line while they make big losses and then they keep on saying that these losses will go away after some time. That's something we need to see because food business was a good moat for these companies, but the quick delivery business has no moat for these companies. So I think they could see challenging times at least over the next 1 year.
Times coming in for platform companies, at least in the near term, is the take coming in from Sandeep. Chandan, want to come to you to get a sense of the moves that we've been seeing on Eternal, erstwhile Zomato. It's been a mixed set of numbers coming in fundamentally, but that has not given the stock any pressure or any downside at all. What's the take on the charts coming in for Eternal? This stock seems to be holding pretty well for now. We've seen a roughly 15% run up coming in over the last 6 months or in the near term as well. What's your near-term outlook on Eternal? Some key levels if you could share with us.
Yeah, we have a very positive view on Eternal. In fact, we have seen that counter has bottomed out near 200 marks, and after that slow and steady, it has been inching upwards. We have noticed that 240 to 42 has been working as a key hurdle, but on last trading session, it has given a decisive breakout above the same. If I look at the daily chart, the stock is at breakout of last 78 days long consolidation on the weekly chart. In fact, 16, 17 week consolidation breakout is happening. So because of that, fresh leg of rally cannot be ruled out. In fact, we have preferred idea for the day on Eternal. One can buy with support of 238, and this stock has potential to rally towards 260 marks.
Bullish outlook coming in on Eternal from Chandan. Sandeep, before we let you go, want to get your view on the entire cement space. Q4 for the cement companies has been largely good. A double-digit volume growth is what we've seen largely for most of these companies. What's the outlook on the cement space going ahead, given now that we are heading into a quarter where monsoons are going to be at play and cement demand could be slightly muted? What's your take on the sector?
I don't think we have seen double-digit volume growth for the industry. Actually, the growth has been pretty muted in single digits, and that also lower single digits. Many of these, so the main issue in this, so there are two things. The positive in the cement sector is that the cost control of many of these companies has been so strong that despite prices being stable at the same level where they were many years back, the profitability has improved. The negative part is the supply increases are so high that whatever pricing discipline they try to build in or try to increase prices, that doesn't hold for too long. And the valuations are not cheap. So I think those are the perspectives with which we should see the cement sector. They could, for them to do well from here on, we need to see volume growth significantly picking up. So that's something we need to watch out for, but doesn't look like it's going to happen immediately.
Right. Let me get your quick view, Sandeep, on the entire EMS theme and the EMS space, because you have Amber Enterprises, you have Keynes also that has come out with their numbers. And for Keynes, actually, if you look at the core EMS business, that has not performed that well when you compare it to the previous performance of the company. What's your take? Do you think that they are looking good?
No, I think these companies had a sell-off, then they have had a bounce back. So, and they trade at valuations which are much greater than branded consumer durable company valuations. So, although their growth might be higher at this stage, but still, I think even in factoring in the growth which they have, the valuations of most of these companies, I would say, is very excessive given the kind of business they do, which is outsourcing of products for other companies, and that their margins also tend to be in low single digits. So very tough to justify current valuations. So there might be one or two companies which might end up doing well from here also, but broadly as a sector, it's very tough to find value there.
Sandeep, on that note, we'll let you go. Thanks so much for joining us this morning and sharing your view on a whole host of sectors. Thanks again. But time now, viewers, to get in some mid-cap ideas before we kickstart the trading session for today. That's going to be in the next 15 minutes. We have the pre-open rates. We are going to give them some time to settle. Looks like we're in for a muted open, at least on the Nifty. Sensex looking nominally in the red, but we'll give those rates some time to settle as well. But let's talk about some mid-cap bets. And Chandan, we'll come to you. You spoke to us about Eternal, but what else is looking good?
Yes, so I'll focus on Hoodco. We have noticed that Nifty CPSE index has bottomed out and momentum is clearly visible. Hoodco has seen a consolidation breakout of last 8-10 trading session with a decisive close about 230 marks. So expecting some momentum, one can buy with support of 228, and this counter has potential to rally towards 245 marks.
Mid-cap idea coming in from Chandan. Saumil, what's your mid-cap idea?
Some of the Adani stocks are looking great. So I'll be going with Adani Green. Adani Green has just given a small breakout and closing about 200 daily exponential moving average. A fresh buy signal on the momentum indicator. So I'll be looking for a very good rally in the stock. Stop loss would be 975 and the target should be around 1200.